Hello my dear wealthy friends, hope you are doing great. In this video let's talk about investment in mutual funds. We regularly heard about investment in mutual funds, but majority of don't know how to invest in mutual funds. What is NAV value? What is SIP? What are the different schemes available in mutual funds? How to calculate profits in mutual fund? So let's dig deep into this topic. First of all, we have to know what is mutual fund. Some investors group together, they will hire some trustees and they will appoint a professional fund manager, then they will start a company. It is called asset management company. These investors design some schemes from equity market scheme and debt market scheme, and they will invest their money into these schemes. They will get profits and they will divide and share among them. These investors shows the same schemes to the public, and they will provide the option to the public to invest their money into these schemes if they are interested. Simply this is called mutual fund. Hundreds of schemes available in the market to invest in mutual funds, but some are very popular. Those are equity market scheme, debt market scheme and balancer scheme. In equity market scheme, investors do analysis and they will select some companies from different categories like high risk and high income from low cap, and low risk and low income from mid cap and large cap. They will select different companies from different sectors, because if they select one company from one category, like if they completely depend on one company, if that company does not perform well, we may get losses in the future. To avoid risk tolerance, to reduce the risk tolerance to get profits, so they will select different companies from different categories. For example, they will select some companies from pharma industry, they will select some companies from automobile industry, some companies from IT industry, some companies from banking industry. Like that, they will select different companies from different categories, and they will design the schemes and ask us to invest into their schemes. Do remember that in equity market scheme we'll get high incomes, as well as we are having high risk also. The next one is debt market scheme. This debt market scheme is completely designed by the people who want to take low risk. In this debt market we will get low returns, as well as it's having low risk. Last one is balancer scheme. Investors will select some schemes from equity market scheme and some schemes from debt market scheme, and they will group together and they will ask us to invest in balancer scheme. For example, 50% of their money invest into the same schemes, that scheme selected from the equity market scheme, and remaining 50% of the money they will invest into the schemes which are from debt market scheme. Do remember that in balancer scheme we will get neutral income. Now let's talk about NAV value. NAV value plays key role in mutual fund investment. Majority of people don't know about NAV value and what is NAV value. Without knowing about NAV value, they will track their profits. They will track whether they are in profits or loss. So let's discuss about NAV value. We are having a formula to calculate NAV value. NAV is equal to assets minus liabilities divided by number of units. Assets means the amount that you invested in mutual funds. Let's say it is equal to 25 crores. Liabilities means expenses. Let's say it is 25,000. Let's say number of units is equal to 50 lakhs. Let's calculate NAV value. NAV is equal to 25 crores minus 25,000 divided by 50 lakhs. The value will be 49.99, approximately 50. Let's say your NAV value is equal to 50. Now you can track your profits and your losses using NAV value. If your NAV value increased to 60, from 50 to 60, that means you are having 20% profits. Let's say your NAV value decreased from 50 to 40, that means you are having 20% loss. Like that, we can calculate our profits or loss using this NAV value. Now let's discuss about SIP. SIP full form is Systematic Investment Plan. It's nothing but automatically debit your amount and automatically credit your amount. It's completely depend on NAV value. If your NAV value increased from 50 to 60, that means you are in profits. Whatever you got money from mutual funds, that amount automatically credited to your demat account. If your NAV value decreased from 50 to 40, that means you are in losses. So your money will be automatically debited from your account. It's nothing but SIP. Now let's calculate simple profit calculation. There is a formula to calculate our profit. Profit is equal to final amount minus initial amount. Let's say you are invested 3 lakhs rupees. That means initial amount is equal to 3 lakhs rupees. Let's say you got 5 lakh rupees after a couple of years. That is final amount. Final amount minus initial amount. That means 5 lakhs minus 3 lakhs is equal to 2 lakhs. Your profit is equal to 2 lakh rupees. Example 2. Detailed calculation with distribution value. Profit is equal to final value minus initial value plus distributed value divided by initial value into 100. Here final value means the profit you got from the mutual fund. Initial value is the amount you invested in the mutual funds. Distribution value is nothing but its expenses. Let's say it's 2000 rupees. Now let's calculate. 5 lakh minus 3 lakhs plus 2000 divided by 3 lakhs into 100. Let's calculate the value. How much? 67 point something, right? So you got the 67% as income. Example 3. How to calculate annual returns in mutual funds. We are having a formula for that. Profit is equal to final value divided by initial value whole power 1 by n minus 1 of 100. Let's say final value is equal to 5 lakhs, initial value is equal to 3 lakhs. Here n is nothing but number of years, the duration. Let's say n is equal to 5. Let's substitute this value into the formula. 5 lakh divided by 3 lakh whole power 1 by 5 minus 1 of 100. Let's calculate this. How much? Around 29%. This is your annual interest rate. Let me summarize this topic. In the last videos, I was discussing about investment in stock market and investment in bonds. In this video, we discussed about investment in mutual funds. Which one is the best? Let me tell you one thing. If you have time, if you are able to analyze the market, if you are able to doing the research about the market, and if you have time to read articles, following the news channels and reading the newspaper every day, then you can completely go for investment in stocks. Otherwise, if you don't have time, if you are unable to read articles, unable to analyze the market, then you can choose bonds and mutual funds to get your income. Stocks having high risk with high returns. Bonds and mutual funds having low risk with low returns. Thank you. Your AMK.